Okay, everybody, it is time. It is time once again for your Insurance Corner. My name is Bill Miksch. I'm president of WDMA Financial Group in Grayslake, Illinois, where we represent clients in 16 states around the country. 34 years of doing this in the employee benefits area, life insurance, annuities, retirement planning, etc. Tonight, we're here to educate, as we are every night, to educate you on the moving parts of all of these things: Medicare, life insurance, retirement, Social Security, long-term care, a myriad of other things that fall underneath those umbrellas. As I like to say, it's a very complicated, for me, it's interesting. For most people, it's a snooze fest, and that's okay. This is your Insurance Corner, and tonight, we're going to cover some details about what life insurance looks like once you buy it and the kinds of insurances that you're going to be looking to buy over time. This is 101.5 FM, WLCB, Slade's Corner, Wisconsin, coming to you live from the studios in Round Lake Heights, Illinois. And Sean, I think, is going to be calling in, so we'll see what happens. He hasn't called in yet, but he might be tied up for a bit. In the meantime, and I haven't seen the text yet, so I don't know if he's on assignment, as we like to say. But since he's not here, let me just fill a couple of things. As you all know, a part of my mantra with regard to the show is to have little tidbits at the beginning of the show of stuff that honestly either interests me or is newsworthy. And we have had, dare I say, one hell of a last couple of weeks. Donald Trump was shot. Biden resigned or was kicked out, not quite sure which, maybe both. Vice President Harris is the presumptive Democrat nominee, or at least at the moment, that's what it looks like. The Secret Service director, who was responsible for making sure, amongst other things, to make sure dignitaries like Donald Trump, like President Bush, like former President Clinton, like former President Obama, etc. The Secret Service is in charge of making sure that those people are safe, and their duty is to make sure the venues that they go to are safe. Well, as a result of the shooting incident in Butler, I think it was Butler, Pennsylvania, the Secret Service's director today, after just getting whipped in Congress from both sides of the aisle. It's the first time I've seen unanimity between the Republicans and Democrats on a subject matter. They were both unanimous, and she had to go, and she resigned today. So never a dull moment, folks, that's for sure. On a separate matter, with regard to sports activities, for those of you who are White Sox fans, my heart goes out to you. I'm not a White Sox fan. In fact, I like to say, kind of tongue-in-cheek, it's kind of sacrilege in my house. The only White Sox fan that I think is in my household would have been, not just mine, but my extended family, brothers and sisters, would have been my mother. She's no longer with us, but the White Sox, I think, are about to set a record of being the worst team in Major League Baseball ever. At the moment, they've won 25 games and lost 75 games as of yesterday. I don't even dare to think about what that could look like, but if I were to prognosticate based on their winning ways or lack thereof, if they get to 35 or 38 wins, that will be a miracle. And I still think that will not keep them out of the dungeon for being the worst Major League Baseball team in history. Football is about to start, folks. I know that Chicago, whether we like it or not, with the Bulls, the Blackhawks, the Cubs, the Sox, the soccer teams, the Fire, and the women's soccer team, and forgive me, I have had a quick brain fart there as to what their name is, but in either case, Chicago is Bears town for sure, and the media is all hyped up about what's going on. So we'll see. But there's a lot of activity around the country. So football is about to start, and then, engaging time. Yes, my stage name, Engaging Time, Time with a Y. I will be performing live my first paid gig, if you will, at the Fairmont Shores Restaurant in Fox Lake, Illinois, on Sunday, July 28th from 2 to 5 in the afternoon, and again on August 11th from 2 to 5 in the afternoon. So if you get a chance to come out, it's a beautiful venue on the lake. Have a drink, have some nachos, or have a meal. Hopefully you enjoy the music. I'm working my butt off, folks, to make sure I give you a good show. I will freely admit I'm as nervous as a long-tailed cat in a room full of rocking chairs right now. So we'll see how it goes. So with that in mind, and Sean's not calling in the event that Sean doesn't, and you all want to chime in on whatever, with regard to insurance matters, it's area code 262-342-6588. That's 262-342-6588. There is no dump button here, so don't be bad. Don't say bad words. And if you got a good question, you can see if you can stump the master. By the way, there's one other thing I'm going to dig in a little bit more deeper, but this has to do, folks, with HSA and Medicare. Just be aware of the fact that there are a lot of different moving parts with Medicare and HSA. I'm going to talk about this next week. I got a couple other pieces I have to pick up on this. But we just came across something on Friday, and I've confirmed it as of yesterday, that even if you do all the right planning from beginning to end, you've got the right counsel, etc., you can still get pinched in this particular issue. And that's how it came to my attention. And the advisors that I've been speaking to about this, other people like me, we're all collectively shaking our heads going, how the heck can that possibly be? So Medicare and HSAs, just stay tuned. We'll talk about that next week. That assumes, by the way, I'm in town. There's a possibility next week I may be out of town, so we'll just stay tuned for that. So let's get on with this. At 101.5 FM, WLCB, Slade's Corner, Wisconsin. The last couple weeks we've talked about why do people buy life insurance? What are you trying to accomplish? What are the reasons for buying life insurance? What are the typical questions behind buying life insurance? One of the biggest ones is it tax-free? And the general answer is yes. The longer answer is it depends on who buys it and how it's structured. But in the personal world, when you're buying life insurance on behalf of yourself for loved ones when you do pass away, that will be income tax-free. So there are different types of life insurance. So let's just cover them generally, and then we'll get into them specifically. And I suspect, ladies and gentlemen, that we'll probably have to push this on to next week, assuming we have a show, because there is a lot underneath this umbrella to understand. So you have term insurance. You have whole life insurance. You have universal life insurance. You have indexed universal life insurance. You have variable life insurance. You have graded whole life insurance. You have something called mortgage insurance. You have blended, and I think I said graded, but another way to look at it is a blended permanent or whole life policy. So what are all these meanings? What is all this? This is a bunch of gibberish, right? Well, these are different ways in which to buy the kinds of life insurance policies that you may want to buy to protect yourself in the event of a unforeseen passing of yourself. In the event you die, what kind of policy did you buy? And I can assure you of one thing, since I've delivered 4 death benefits in my career, folks. Nobody's ever asking, What was the cash value? What was the dividend? What kind of policy was it? They never, ever will ask that question. Even the most seasoned life insurance policy buyer will never ask that question. The only question they're going to ask is, how much am I getting and when am I going to get it? That's the only question they're going to ask when a loved one passes away. And there is a process to it. It does take a little time. We're not going to get into that at the moment. But whether it's term or permanent coverage, it's all the same. At the end of the day, you bought a policy, presumably with an advisor at some level, even if it's one of the 800 numbers that you can dial up. Although, with due respect to them, I look at them as order takers because they're not going to ask you a bunch of questions, short of health questions. They're simply going to ask you, what do you want? I want $500,000. Great. Let's take the application, answer a couple health questions, and boom, you're done. So let's talk about term insurance first. What is term insurance? Term insurance simply means that you're buying an insurance policy from point A to point B. And the premium can be fixed or can vary from year to year. And we'll get into that in a second. But once the term is over, let's say it's 10 years, you're buying a policy that the premium is fixed for 10 years. That would be considered a 10-year term policy. Once that policy is done, if you didn't pass away, the insurance company, as I like to say, won the bet. There's no investment feature. There's no cash value feature per se. You were renting that policy, and now 10 years later, do you need more? Do you need to buy another one? Do you need more than what you bought the first time around? What are your circumstances? So you have what is called YRT, yearly annual term. What does that mean in English? The premiums are going to go up every year, incrementally. Now, this may be a cost-effective way to buy an insurance policy if you're only buying it for a short period of time, maybe 10 years, maybe 15 at best. After that, as the policy starts going up, it's going to start getting cost prohibitive because you're getting closer to your mortality end date. And the older you get, the more expensive life insurance gets. It doesn't matter what kind you're buying at that point. With these YRT programs, you don't have to go through underwriting each year. The premium's already guaranteed to be what it's going to be based on the illustration, so you know from year to year what you're going to buy. You can include in these YRT policies, and frankly any term insurance policy, you may be able to include a disability waiver clause. What does that mean? That means if you should become totally disabled, and I want to underscore the word totally disabled, it is basically the same definition that Social Security is using to determine if you are Social Security or disabled or not. Totally disabled. If you are totally disabled, after a period of 6 to 9 months, depending on the insurance company, they will pay those premiums, the insurance carrier will pay those premiums until you get back on your feet or until the end of the term policy ends. Now, with YRT, premiums are going to continue to grow and grow and grow. Every year they're going to go up. So theoretically, if you have a YRT or an annual increasing term policy, it may take you to age 65, 67, or 70, depending on how it was structured. It may take you a little past that, but it's highly doubtful that that's going to take place. The YRT policies will then, if you're totally disabled, be paid for by the insurance carrier. So there is a possibility that at least with the YRT, if you became sick or disabled and couldn't pay for it, after a period of time, the insurance company will pick up where you left off. Then you have finite term policies, a 5-year term policy, a 10-year term policy, 15 years, 20 years, 25 years, 30 years, 40 years. And in some cases, if for the more not affluent, but the more seasoned insurance buyer, they may look at a term policy to age 95 or to age 100. We'll explain all of these in a second. There's no cash value in a term policy. None. Zero. Zip. No cash value. However, there are policies wherein you can put in a clause or a rider that says, I want to get my premium back if I don't pass away. Now, that's an interesting little provision that the insurance companies have added to the policy in, let's say, the last 15 or 20 years. But to me, as an advisor, then if you're going to do that, why not consider buying a more permanent policy? And we'll get into the permanent stuff in a few minutes. But you have to then consider the cost of the premium, because that rider is not going to be free, and ostensibly it's going to take the premium, which is generally cheap in a term policy, and it's going to jack it up to a point where it may be equal or pretty darn close to being equal to a more permanent policy. So we're going to talk about what that looks like here, but in general, no cash value unless you have this rider that says I get my money back if I outlive the policy. As I said earlier, you're renting the policy. Why? Because you have no invested interest in it except for the premium. The only invested party, honestly, is the insurance company. They're hoping you don't die. You obviously hope you don't die. But if you do, you're passed, but the life insurance company is now going to have to issue a death benefit based on the contract that you signed with them. So you're renting it because there's no intrinsic value, no cash value to the policy. Some policies may have what's called an advanced death benefit. We see these oftentimes inside of a term policy in corporate life insurance policies. So if you have a guardian or a principal or Sun Life or something like that, and the employer has bought a group life insurance policy, let's say 1 or 2 times your income your salary, there likely would be a provision in there that says in the event that you get a diagnosis where you're expected to pass away within a year, sometimes 2 years, but generally it's a year, that they will advance anywhere from 70 to 80% of the death benefit to you income tax free. Now you think about that and go, okay, great, I got $500,000 of life insurance. Let's just use 80%. They're going to advance $400,000 to me for whatever I want to use it for whatever. Is that what that was for? Or is it for taking care of your family to make sure that they can maintain the lifestyle that they've enjoyed up until that point when you've gotten this unfortunate medical condition where you're deemed to be terminal? So the advanced death benefit does have some curious things. I have not seen this before, but there is a question that one day I'm going to ask, and I suspect my reps are going to have to go to underwriting to get this answer. But what happens if divine intervention sets in? You got your $400,000, and now you're living. Divine intervention sets in, you're cured. Whatever ailed you, you are cured. You don't have to pay it back, because at the time, the trigger was you had a terminal illness, and now you're cured. What happens? Don't know. I've never seen it happen. Honestly, I've never asked that question, so stay tuned. We're going to find out next week if we have our show and see what I come up with from the various carriers. I only have to ask a couple of them because they pretty much, in the group space, they all have it. In the individual space, the bigger question is, okay, I got $500,000. You advanced $400,000 to me. I am now perfectly healthy and clean. I may have to wait a couple more years to verify that medical condition has cleared me. But let's say 5 years later, you're perfectly fine, everything's hunky-dory, and you're going to go out and buy another one. Here's a second question that I don't know the answer to. You got this advanced death benefit. You were terminally ill. Now you're cured. 5 years later, you're going out and buying another life insurance policy. I know there's no question on that policy, have you ever accepted an advanced death benefit? Nobody in their right mind would ask, because 99% of the time, probably, that policy is going to issue the advanced death benefit, and it's over. But what happens if you do have divine intervention? I'm going to find out, because it could happen like anything else. So you can also, and again, these are permanent policies now that I'm referring to that you're buying on the street. You're not. This is not necessarily getting us through the employer. There are provisions in there where you can convert the policy from a term policy to a more permanent one. Now, that permanent status is going to depend on what kind of a life insurance company you bought your policy for. Are they known for whole life policies, or they're not structured for that, so you're going to get a universal life policy or maybe an indexed universal life policy, which we're going to talk about in a few minutes. So converting the policy ostensibly means that I'm surrendering the term policy and I'm going to make it now permanent. Now, what's going to happen to the premium? Premium is going to be based on how old you are at the time of the conversion. There will be zero medical questions asked of you. So if you have just gone through a bout with some kind of a cancer that admittedly is cured, but it has stifled your ability to get life insurance for a while, and you know your term insurance program is about to expire, maybe in a few years, ask what it would cost to convert. So let's say you bought the term policy at 35, you're now 48 years old, you bought a 15-year term policy. You bought it at 35, so at 48 you're going to convert the policy. You were issued that policy as a perfect specimen. You had no hits, runs, errors, no medical problems whatsoever. You were perfectly healthy. You got the best rate. You got the rate that you hear on TV that only about 5% of the population ever gets. Ever gets. I just saw one the other day for, I think it was $500,000 in the little white commercial part. It said 10-year term and best health or perfect, I think it said best health underwriting.
For quality assurance purposes, this call may be monitored or recorded.
Okay, then. Well, something has happened.
Good afternoon, Villageview. This is Michelle. May I help you?
Michelle? Hello? Michelle, you're on the radio. I don't know how you got on my radio show, but you're on the radio. Did you hang up? I think you did. I think somebody just tried to dial in, and I think they didn't realize it was a radio show they were dialing into. Sorry about that, folks. That was a first. Anyway, conversion of the policy means you're taking it from term, which is a cheap premium. You're going to get the underwriting level that you were issued the policy for. So it was the best policy or standard plus or smoker or something, whatever it is, whatever the underwriting status was at that time, that's what you're going to get. No questions asked. Convert the whole thing $500,000 from permanent or from term to permanent. What is that premium going to look like? It's going to go up. And it's going to be fairly significant because you're 13 years older. And you're halfway through your mortality tables, theoretically, or at least maybe 2/3 of the way, depending on your longevity status. So you have to be prepared for what you're about to spend on a whole life or permanent policy. And then the second part of that conversion is, depending on if it's whole life or universal life, you're going to also want to make sure that if you are converting the policy, that the policy is going to hold its own if you're going to have to pay those premiums indefinitely. Because if it's not structured right, if it's not put together right, the policy that you bought when you were 48 and you're still paying for it into your 70s or 80s, depending on how you structured it, it could blow up, and the insurance company could come back and say, well, I know, Bill, that you've been paying this policy and It's the premiums for $3,000 a year. I know the term was only $100 a year, $100 a month. Now it's $3,000 a year, or $4,000 or $5,000. But now we're going to need $10,000 because the cost of the insurance has far exceeded the cash value in the policy, and you are in trouble or the policy is going to blow up. So, got to be careful on the conversion. Make sure you get good counsel from somebody who knows their way around on those conversions. We talked about the disability waiver clause. Just to reiterate, the disability waiver clause basically means that if you become totally disabled for 6 to 9 months, depending on the company, they will end up paying your policy. Now, the good news is you're going to have a life insurance policy that won't expire until the contract is up. On the other hand, the bad news is you're totally disabled, and that's why they're doing that. So, in terms of term insurance, YRT, 5-year term, 10-year term, 15-year term, 20, 25, 30, 40-year term, or term to 95 or term to 100. Now, let me explain what term to 95 or term to 100 is. It is a universal life policy that is structured specifically to run guaranteed to age 95 or guaranteed to age 100. Those premiums will never change. Never. There might be a little bit of subtle cash value in there, but it wasn't built to generate cash value. It was built in such a way that the policy would maintain its structure all the way until age 90, 95, or 100. In some cases longer, but typically 90, 95, 100. How does that work? A universal life policy is basically an insurance policy, a term chassis with an interest rate crediting feature, kind of like a CD or a bank account. So if the cost of insurance, let's just say, is $100 a year, and the interest credited to the account is $5, you may end up at the end of the year having a couple bucks in cash value. But that's it. You paid in $100 a month, $1,200 for the year. The first year, second year, cash value may be very small because it wasn't built to develop cash value. It was built so that it stays afloat until age 90, 95, 100. In the event that, and let me back up a second here. So it's a term chassis with a provision that has been built so the premium can last in that policy for that length of time. If you miss a premium payment, it's no different than term. It will expire. So now you've bought a very expensive permanent kind of policy, albeit on a term chassis, and the policy is now blown up. So you spent a ton of money to try to make sure that your insurability was good, and now you're out because you forgot to pay something. So one thing I want to recommend is that most life insurance policies, folks, are on a monthly basis, automatic check withdrawal. The life insurance companies won't even deal with you if you want to pay monthly and on your own. They're going to do it through a bank withdrawal or not at all. If you want to go quarterly or annual, then you can pay directly, but you're going to pay, except for annual, you're going to pay a little bit more money, especially if you do quarterly. You should also put in there who's to be contacted in the event that the policy is in jeopardy of being lapsed. If that policy is in jeopardy of being lapsed, that means it's in jeopardy of expiring because somebody missed a premium payment. So you might want to put a loved one in there or a trusted friend or colleague or advisor to make sure that they're on top of it. They get communication so that the policy does not expire. We are at the bottom of the hour. We're going to hit whole life insurance next. It's 6:32 at 101.5 FM, WLCB, Slade's Corner, Wisconsin. We'll be right back after these short messages.